This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Monthly market update for January 2026. I have to let you know and remind you that this data, a lot of this data is from December. We pulled December data, look at January data. And also this is all just single family homes because that's predominantly where I work. So this month we currently have available 6,524. That's actually down almost 1,000 from last month. Number of homes in escrow, 1,648. That's down 400 or 300 some. And sold in the last 30 days went up a little bit. We have 3.7 months worth of inventory. That's your absorption rate. That's how many homes are available versus how many sold in the last 30 days. And our average days in the market went up 51. And our median sales price came back to 470. It went up. It shot up last month to 490 for some strange reason, but it went right back down to 470 where it's been forever. I talked about last year. We only had a little over 5,000 homes available. We had about the same number in escrow, a little over 1,700. We sold about 1,600 in that 30-day period, and we had an absorption rate of 3.3 or 3.3 months worth of inventory. The average days on market last year was only 32, and our median price was at 473. Now, this is something I've done recently where John Ingram recommended I do this and show the highest price paid for a single-family home in the last month was $11,500,000. The lowest price was $61,750. I don't know what house that was, but I'm sure it needed help.
Yeah.
And that's a single-family home. That's not a condo. There's a single-family home somewhere that sold for $61,000. This is our stack chart. This shows how many homes have closed, and this is the wrap-up of 25. So it shows it's the worst year we've had in terms of closings since 2007, and it was even worse in 2023, which was pretty bad. And it's just in terms of closings, the number of homes, single-family homes we sold in this year was way off. You can see, there it is. There's the actual number, 22,786, which is just a few below 23. So it's about the same as 23, just a little bit less. The median price, look at that. It's just flat. That one little blip right there, just a weird little bump last month, must have had a whole bunch of high-end closings is what happened, and that skewed the median. But you see the number has been floating around the same number for 2 years. And that's not changed a bit. When we look at verticals, this was kind of interesting. I mean, if you look at the step down in number of vertical closings over the last 5 years, it's pretty interesting. In 21, a huge number of vertical or high-rise closings, and now it's basically half that now in 2025. And that market's struggling a little bit. We've seen prices be impacted in verticals. It's come down. There's been a lot of impact in that area. A lot of investors jumped into that thinking it was going to be attractive. And I think now they're deciding it's not as attractive as they thought because of the monthly, the
HOAs.
The HOAs are expensive, so it's not as attractive as they thought. And in luxury sales, $3 million. Now this is where you can see that's one area where things are strong. I mean, basically they've had the two best years ever, last year and this year, in terms of number of homes over $3 million that have sold. And that's a function of the median or the average price, and it's also a function of more high-end buyers moving into our market from California and elsewhere. And then here's my line graph. For those of you who don't recall, I do these three lines. The three most important factors I believe in real estate. The orange line is the number of homes sold in that 30-day period. You can see that's hovering right around that 2,000 number every month throughout the year. The available homes kind of peaked back in October, and it's been slipping ever since. And then the median sales price is virtually a flat line at $470,000. And there's our monthly market update for January 2026. Sorry it came late. Any thoughts on this, Nick? What do you think?
I think it's interesting. We've got some reverse seasonality there of having such a big pickup in the fall because usually it's spring what we would expect. And
yeah.
I don't think there was anything that happened in the world that would dictate why that happened. So I just wonder, something happening locally.
No, I think that, presidential elections always impact, and that was last year, so that might have had some impact then. This year, I can't think of too much that would have done it. You're right. There is a seasonality to our real estate. I always say, and I got a number of sellers who are kind of waiting a little bit. I always say that our market warms when the weather warms, which is right around Valentine's Day. So that's when we'll see things start to pick up. If we looked at last year, it started to pick up more towards May. I mean, it took a while for it to ramp up. This year, hopefully, I think we'll see that pick up a little bit quicker.
I did have a question, though.
Shoot.
You don't have the data directly on here, but have you noticed an increase in the number of maybe deals that are falling through?
Yeah. Well, we talked about that couple months ago, there's a lot more buyers are skittish, and likely to walk away. They'll utilize a home inspection to make a determination that they can get away, or if we actually had one buyer cancel because they didn't like the terms of their loan, which they knew ahead of time, which we really had a problem with. I mean, I was like, as a seller, I'm like, that's not something you can back out because you didn't like the original terms you had on your mortgage.
Yeah.
Maybe what happened was, I think maybe they locked their rate and it went down and they couldn't move it, and so they decided to cancel the deal, which is basically, to me, that's a default. That's as a seller.
How do you define like backing out of a deal? When is it? Is it after there's an offer made, or
an acceptance? After an acceptance is made,
an accepted offer,
and then
it's in escrow, or
the buyer has a handful of contingencies. They could inspect the home and decide they don't want to buy it if the seller won't fix the things they want them to fix. They can review the HOA documents.
Okay.
If they don't like something they read in the HOA documents, they can cancel and get their earnest money back. The home has to appraise. And if it doesn't, they can negotiate with the seller to make sure that they come up with an agreeable amount, either adding more cash to the deal or the seller reducing the price. And then finally, there is a financing contingency that does expire at some point where they can cancel because they couldn't get approved for the loan. The loan. So that's the major ones that a buyer. Now a seller, on the other hand, has no contingencies. Once they sign that paperwork, unless the buyer does something funky, they can't just. Yeah, I changed my mind. I can't sell. Now, if the buyer says to the seller, gee, I want you to fix this, and the seller says no, and the buyer walks away, okay, that's fine. The seller can get and if the buyer asks for something, the seller wants to get out of the deal, they're just, I'm not doing anything. And then they can have the buyer cancel the deal and agree to let the buyer out and give them their earnest money back.
Interesting.
And that comes up when the market shifts. Sometimes sellers think that, gee, maybe I could get more money now if I don't sell to this particular buyer. Which is a mistake. You don't, because the sellers really don't, in our contracts, they don't really have any contingencies.